take any trades, right? Um, so like I said, there's a much bigger goal attached to what we are actually working for. Everybody started trading because they A, wanted to quit their job, B, change their lives, C, do a side hustle, B, just pay some extra bills, buy a car, whatever it may be, put some money aside for their kids' futures, buy a house, deposit for a house, whatever it may be, right? There is always a reason behind everybody doing it. And one thing I've noticed in the whole time I've been in this industry is that so many people come in and then they fall by the wayside, right? And I watched that happen. And I kept wondering, why is it that people fall off? Because surely their goal should be more important than anything else in the world, right? Is you don't want to work a job. You don't want to be told what to do by a boss. You don't want any of that stuff. You want to live a nice, cool, free life, right? Um, but the reason why people fall off is because they don't get help. They lose money. They don't understand what they're doing. They're not guided in the right way. And again, you guys know my thoughts and feelings about that. I totally disagree with it. I think if people trust you enough to get started with you, you owe them to help them. It's not that we have to do everything for the person, but you damn sure owe that person to help them, because for lots of people, it's a massive thing. It's a massive trust thing because there's so much badness in the world of trading. So the way I look at it is like it's my responsibility to make sure that my community know what they're doing and my community are winning. And that's why too many people fall. And that's why I've always vowed that my community will be the biggest, strongest, most successful community out there, right? So that's why I want to teach you guys that you can change your life from trading. And I want to get you all into that point, to that point where you are making your daily, monthly, weekly salary. Oh, thank you. Um, you're making that in a very tiny fraction of time because it can be done. And it just takes people to help you, to guide you, and show you what you need to do. So that is the goal for this group. So demo account 5,000, leverage 1 to 500. I will give you the lot size on the Monday session. We're going to start the compounding challenge as well. I'm going to really go deep with that one as well, which I can't wait. Because you got to think compounding can be done. It's just that people haven't found the right place to do it. And that's it. So we're going to make it happen, right? So I hope you guys are ready for it. I hope you guys are ready for a new level of thinking, a new way of thinking, a new mindset when it comes to trading, and just understanding and starting to see trading in a different light. All right. So that's the goal, family. And I'm so excited because do you know why I'm so excited? Because I know that this is going to happen. Like I literally pray to God every single night and every single morning that you guys become successful every single day. So I know it's going to happen. And you see, one thing that we should have in this world is faith, belief that it can be done. And when you have somebody else having faith and belief in somebody else, you can manifest for them people. You can literally manifest for other people. It's crazy, but it's true. So, yeah, That's where we're at. Right, okay, so I haven't said to get into another trade just yet because I was watching it as I was talking. I kind of wanted to see what it was going to do here. We kind of pulled back as we got into this fair value gap, actually. Okay, so we've just crossed on the 1 minute for the EMAs. We haven't, well, we crossed here, but we've just crossed here. So let's see this, what this candle does. It's really important to understand what this candle does. Is this candle going to pull back to the 50, right? The EMAs. Because usually when the EMAs cross and the sell signal comes, pulls back to the 50 and then should continue to do what it wants to do. And this this EMA, the 238, needs to be behind us for the sell. The EMAs need to cross. This needs to be here. Okay. Oh yeah, good volume. And technically this, okay, this needs to be aligning up as well. So if we go back down on the 1 minute, let's see if this is the pullback. And then if it does continue to the down, this should change. Oh, you see little moves like that? Dirty move. And this is why you should always wait, guys, before you enter a trade. Imagine if we had have got in at the crossing of that EMA, at the pullback, all of this, and then it went and done that. That would have that wouldn't have been a good trade, right? So you see why it's so important to wait. Okay? If we take out this previous high, guys, you know what to do. You enter, you pull up your stop. Okay, no worries, Brian. Look, if you need me, please reach out. I'm here, okay? Whatever you need, just let me know. Okay, so what we're gonna do is we're gonna see if we can get a trade from here, right? And then if not, we're gonna go. Are you guys happy for me to go into um kind of breaking? Oh shoot, I missed it totally. Are you guys happy for me to go into like the study? Yeah? Okay, perfect. Okay, perfect. So let's see if this comes back up to take it out. See, because we're in a bit of a, this is an order block, right? So in an order block, you will get lots of pullback. All right, my lovely. You will get a lot of pullback in it because it's where the market will put place its orders, of course. That's what an order block means, right? Order block. So let's see if this does continue up. But just if you are in, just pull up your stop and see if it goes. It's kind of like very up, down, up, down, up, down kind of. You see what I mean? This is what you'll get in an order block. Sometimes it will bowl straight through an order block, but then sometimes you'll find that if the order block is, look, there's a lot of commotion going on here. You can see order block, breaker block, right here. So that means that there is money trapped in this area because that's what a breaker block stands for, trapped money. So this is what you will tend to find in zones like this. Right. Okay. So look, what we're going to do is we're just going to go straight into learning. Okay. Let the market be the market for today, because it has been very, very bad. Anyway, but what I'm going to now do now, look, I want you guys to see this as well. Okay. So first things first. Okay. What have I got on here? Let me just try and get it clear so you can see, right? Can you guys see all of this? Yeah? Okay. So I've got swing high, okay? Swing high and low. I've got order blocks, I've got breaker blocks, okay? I don't know why I've got order blocks and breaker blocks and then order blocks. Order blocks detected, no, because that one's a good one. Hang on a minute. Let me just check that a second. Order blocks and breaker blocks. Uh, all right, well, that's not really doing anything. Okay, cool. Don't worry about it. Right. So then, as you can see, I've also got double top, triple bottom, triangle, rectangle, inverted head and shoulders, inverted cup and handle, head and shoulders, Elliott wave, double top, double bottom. Have I got that twice? No, cup and handle, and then I've obviously got DeFi kill shot, support and resistance levels with breaks. You don't have to have all of these, right? And then I've obviously got this auto chart pattern, okay? You guys don't have to have all of that, but these ones here are not like proper. I don't know if it would um, affect your numbers on TradingView, but these I do have, okay? Because it does help to kind of confirm them patterns as well. And confirmations, in my opinion, is you can't have enough, right? You cannot have enough. But for now, I am just going to turn it off and we are going to we're going to start with just a clear chart. Surely there's a quicker way of doing this. It doesn't really matter. We'll leave kill shot on. And we'll leave the fair values on. Okay. Now, can anyone remember when we first started doing these sessions? Can anyone remember Mark? Yeah? Now. Okay, perfect. Right. So when we first started doing these sessions, we just had kill shot and we had DeFi on the opposite side, right? And we were going through the banking levels and things like that, okay? So we had DeFi. So let me just go ahead and turn all of these off. No, DeFi. Okay. Now, so this is how we started off our sessions, right? We would have kill shot on one side and we would have DeFi on the other, right? Now, we were using the stars and we were using these lines because guess what? Caroline had her lines marked out, but not so. In fact, no, sorry. I'll backtrack a minute. When we first started the sessions, we were using the stars, but the banking levels as well. So what we did, yeah, I'm recording, right? So what we did is we would take the trades, we would break out of the banking level and take it to the next banking level. Break out of that banking level, take it to the next. Break out of that, take it to the next. Break out of that, take it to the next. And that's how we were scalping on the sessions. Now, when we got to the bearish banking levels, you know, obviously you have to be a bit more careful because, you know, it could drop. But once it broke out of the bearish, we would just continue. Now, let's say, for example, with us being on, you know, the 1 minute time frame. It was so simple to take the trades using these banking levels and these lines, right? Because we knew that, of course, look, one line breaks up, comes up. You see? So we were using the lines as our guide to take in the trades. And it was very, very simple. Now, what we were also using was the Bollingers. Okay. So when we were coming up, let's say, for example, a trade came in, we would pull up our stop and we would just keep taking it from banking level to banking level. If the trade hit TP3, that wasn't our TP. Well, it was never the TP I said I would that we were personally using. Okay. Because once it come out of TP3, we know it's going to hit the banking level, right? Just like this one did. Came up. Where did it come out, right? It came up, then it pulled back down, okay? Then it came back up, and it hit the banking level, all right? So we would allow the trade to take us, sorry, let's go back, forget about all of that, right? Trade comes in, hits TP3, and then boom, straight through the banking level, right? Look, to the Bollingers. Once it hits the Bollinger, look at what it does. It pulls back. What did it do? It hit the Bollinger and pulled back to the bullish banking level. Okay? It pulls back to the bullish banking level. You see this gray line? This was always there as well. So when we break out of the gray line, we know that we're going to go up. But where are we going to hit? Guess what? We're going to hit the bands. Now, sometimes it comes out of the bands just a little and then pulls back, right? So we were using the lines as our guide as well. And we would just take the trades and that was it. It was a very, very simple but effective way of trading. Guys, whoever remembers that way of trading, please put me in the chat, because that's where I started doing all my TikTok lives. And can you guys remember how easy it was to trade like that? Tell me on a scale of 1 to 10, 1 being bad, 10 being good, where would you have put that original strategy that we had on a scale of 1 to 10? $11. It can be. It can be simpler, yeah. And I had my lines as well. I always had my lines, right? But this is how we did it, okay? And it was, like I said, a very, very simple strategy. Look, hits the bands. And this is where you have to just be careful, because look, you know, when you're in a trade, when it hits the bands, okay, I'm going to pull my stop all the way down, right? Let it do its thing. Let it go where it wants to go. Don't pull your stop too far down, okay? Because you should know that it's just going to flip from band to band, okay? Yeah, you're going to get these pull-ups, but if you look, right, if you actually look and see what you can see right in front of you. In fact, I wonder if I've still got them old training sessions. That would be so good, right? But look what you can see. You can see that it flips from band to band. But then look, when it does its higher lows, lower highs, all of that, what's it doing? This is how we were utilizing the stars, right? So you can see it hits this, pulls down, creates this, and then shoots back up through it, right? So look at what can you see? What pattern can you see right here? This is your gray line. Yeah. What pattern do you see right here through this gray line? Tell me what you see running through. Like, if you could put a word to it, what do you see? Can you see anything? Yeah, so look, right? Market is always kind of pretty much, look at it, staying in between the middle of the candles, right? Of the breakouts, right? It breaks out, comes down, hits the Bollinger. Hits the if it doesn't break through it, it will come back down, hit the Bollinger. If it doesn't break through it, come back down, hit the Bollinger. If it doesn't break through it, or if it does break through it, it will come up. You see? So you can use this gray line as a kind of a guide. Let me go to like the 15. Can you see now more clearly what it does? It runs through the candles. When it breaks out, it hits the Bollinger. When it breaks out, it hits the Bollinger. Right? Not every single time is it going to go and hit the tip of the Bollinger, but you know at some point it's going to either hit the Bollinger or it's going to pull back. Okay? So look, breaks out, hits the Bollinger, hits this line, comes back to the Bollinger. You see? Breaks out, hits the Bollinger, hits the line, hits the Bollinger. You see? Does this make sense? What I'm trying to show you here. Like I said, sometimes it's going to break out and it's going to come down even further. But you could easily breaks out, hits the Bollinger, comes back down, hits the line, comes through. Again, remember, not always, but majority of the time, it's going to run through it. But when it breaks out, it's going to come up, hit the Bollinger. Am I making sense to you guys? Please, because I want to make sure I'm making sense. You see, you have to go back, right, and look and see what you can see. Right? When you go back and see what you can see, you see a pattern. And the pattern I'm seeing is that it's literally just running straight through. But when it breaks properly, boom, it hits the Bollinger. So it would be so obviously this is the 15-minute, right? It would be a lot different on the 5-minute. But whatever time frame you prefer to trade on, use it. Look, perfect example on the 5-minute. Absolutely beautiful example on the 5-minute. Look, hits the Bollinger, breaks through it, goes up. Hits the Bollinger, breaks through it, comes down. You see that? Perfect, 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 perfect example, right? So whenever you get close, let's say, for example, it's hit the Bollinger, you take a buy, right? You take a buy. As you come closer to the line, you just pull up your stop. Don't put it up directly underneath it. Give it some room, but if you did, you would give it plenty of room. Let it do its pullbacks and then allow it to keep going. Perfect, perfect, perfect example, right? Absolutely perfect example right here. Okay? Hits the Bollinger, right? You're gonna look, you'd be watching it, for example. You take the trade, and you know you can set alerts to alert you so that you're not having to sit there watching, right? So look, hits here, boom, straight up, comes up. Yes, it comes back down, but then it's creating, its higher highs and its lower lows. So you have to allow room for the higher highs and the lower lows. Now, this is when you're kind of like, you want to take longer term trades, okay? You could have took that trade, okay? set yourself, you know, a little secure stop profit, right? Just set yourself a nice little secure stop profit and then just let the trade run. Keep an eye on it. Wait for it to come close to this gray line. If it breaks through the gray line, great. You pull up your stop just to the outside of the Bollingers, okay? Just to the outside of the Bollingers, because from here to here, that would have been a solid trade anyway, right? A nice solid trade, 86, say to maybe here or something, right? To 98, okay? And then you just allow it as it comes up, allow it some room, because guess what? It can pull back. Now, once it breaks again through the line, then you want to start bringing your stop up a little bit. And you would bring it up to this previous high lows, swing highs and swing lows, right? Bring it up, set your stop here, and then just let it do its thing, right? It kind of consolidated for a bit here, fine. And then you watch it, wait for the breakout, boom, take it to the Bollinger. Exactly. And if you just did things like this, even if you couldn't watch it, even if you couldn't sit there and watch it, as long as you allow your trade a little bit of room, okay, just pull it up a little bit so that you've got some room to allow for all of this commotion that's going up and down, you can literally trade from band to band. Now look, at the top of this band, you get in, you take, you know, you've got a sell stop waiting or a sell limit, right? Boom. That would have been a solid, clean sell coming down. Why do I say clean? Because it wasn't like massively up, down, up, down, up, down to the side. You know, it wasn't. It was a nice, clean cut, solid pull back to the downside. Because once it breaks, you see, because then when you go up, right? Remember, market goes up to come down. So when it's going up through all of these areas here, yeah, and it's creating these little swing highs, little swing lows, blah, 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 all of that, yeah? When it comes down, it's almost like, you know, like when you're climbing up a hill and you're like, oh my God, are we there yet? Are we nearly there yet? The steps are getting higher. Oh, this is doing me in, right? And then you finally get to the top, right? Do you not realize, and do you remember what we say about gold? Isn't it easier for gold to drop than it is for gold to soar up, if you've noticed, right? Treat trading like a life, right? It's hard going up the hill. You know, you're pushing, you're sweating, you know, you're getting tired, blah, 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 blah. And then look, it just comes sailing down nicely. Once it goes through these previous, it's going to break. Once it comes through these previous, it broke here. Yes, it pulled back a little bit here, right? But that was because of this line here, right? Pulled through, and then it was a nice, clean drop. Guess what? Back down to the Bollinger. Am I making sense? I like to kind of put trading in with your, because that's what it is like. If you've noticed with the buys, sometimes the buys can soar up. Yeah, of course. Right? But the sells come tumbling down. Then when you get a solid move like this, you're going to get a couple of little moves like this, right? From here up to the line. You know, you could even trade from Bollinger to the line. Wait for it to come back through to the Bollinger. Wait for it to come up. Yeah. Forget about this one here, because this is just nothing, right? Even though you could have made some money from it. This is nothing compared from here all the way up to here. Even if you got in here, or you could have got into here, up to here, or up to the line, let it come back through the line, got in, and then boom. You see? So pay attention to where the market is. Now, why is the 5 minute particularly good? And it gives you kind of more of a structure, but not so messy as the 1 minute. Do you know why? Why the 5 is more kind of less candles, yeah? Less impulsive, like, well, it's not as impulsive in terms of like liquidity sweeps and stuff like that. It's less erratic, and also the 5 minute will determine the overall trend, right? Slower movement. Now, remember what I said about off time frames. Okay. Off time frames. Why do I trade the 3 minute? Because it's in between the 1 and the 5, right? That's why I trade the 3 minute. But look, if you had taken it from this band to this band, you see, you're gonna get different moves. You're gonna get more bigger moves than you would in the 5 minute. Okay, so you can analyze the 5 minute, but use the 10 minute as your guide as well. Okay, because obviously in between the 5 minute, you got 2 candles. So using off time frames is something that resonates with me a lot. Okay. So remember as well, when you want to keep it simple and you want to just scalp, okay, I always like to have the 1 minute and the 3 minute on my chart, because again, the 3 minute is the chart I trade, right? I mean, look at that. Wow. Right. The 3 minute is the chart I trade, right? So I do like the 3 minute, but you can still get some solid movement off the 1 minute. So I always like to keep my eye on the 1 minute. Now, if you're scalping the market, you can literally, like I said, and this is why I've brought you to the 1 minute now, because look, with this move to the upside, where was we? This was in April, right? Well, we're still in April. This was today. I don't know why I'm saying that. Right? But look, okay, if the market wasn't such a, I don't know, a volatile place today, it would have been a good time to trade. But look, banking level to banking level, right? And every time you go through the banking level, you just pull up your stop. You pull up your stop and you let it go to the next. Get in, you pull up your stop and you let it go to the next. You try to let it go to the next. But look, this is just a thing that I put up there, right? But it literally did hit that. Okay, so you get in, you pull up your stop, right? Again, it hit here, come back down, wait for it to come back up, get in, pull up your stop. Yeah? Wait, come back. And remember, you are not counter trend trading, right? You are going to trade the trend. Why is that? Because if you counter trend trade, expect to lose. Literally expect to lose your trades, because counter trend trading is the worst thing that you can do. So again, look at previous data, right? Get in, pull up your stop. If it doesn't quite go to the top, it doesn't matter. Guess what? It will if it's on an uptrend. Now, this is if you're scalping, especially like for the ones that are doing like they're doing sessions on TikTok or something like that, right? You can have a chart on your screen and it can call out trade ideas. Great. Use that. Okay. But if you want to take some real quick, short scalps, especially doing the calls and sessions on TikTok and whatever it may be, get in, pull up your stop, let it run. Get in, pull up your stop, let it run. Get in, pull up your stop, let it run. Get in, pull up your stop, let it run. You see? And how it just went all the way through the banking levels. All the way, all the way. Now, when you get to the bearish banking levels, you're going to see bigger moves, right? Because if it breaks a banking level, it's going to come up, right? Now, again, you get in, pull up your stop, wait, get in, pull up your stop. Now, this particular candle could have took you all the way up there because you would have just pulled up your stop, right? Get in, pull up your stop, and let it go. It is one of the simplest ways to scalp using these levels, right? So I would obviously have this here. I would have this in front of me. Yeah, it's being recorded. I would have this in front of me. I would wait for trades to come through. If a trade didn't come through, guess what? We're still trading, right? If a trade doesn't come through, we're still trading because we're just going to use the banking levels, okay? And as you saw in the chat, it was a very, very simple way to trade. Banking level to banking level. And pretty much, I don't know if no one ever said anything, but we would be hitting profit nicely. We'd be making some good profit just using banking level to banking level, banking level to banking level, right? And that was it. That was it. Very, 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 very simple, simple way. Now, let me bring you to kill shot, okay? So you know with kill shot, right? When the EMAs cross, the red triangle comes in. Again, you have to make sure that if you are getting into a sell, that this is behind you. So this would have to be above us, right? Now, if you were on Jay Bonham's call or Jay Bonham's session, you'd have to wait until it got here. But then it's going to come down, come back up, come down, right? But what I would suggest is you look back, okay? Look back. And that's why it's important to have markups on your charts as well, certain things on your charts, because look, that one, if you had got in, you would have lost. But if you had got in at the cross of the EMAs, you would have made money. Now, US 30 is going to be different to gold. This is why I want to implement US 30 as well, because US 30, the way that it moves is going to be very different to gold. So the EMAs crossed, you could have entered into a trade and pulled up your stop, right? Then that way you would not have lost that trade. Now, what you can also do is, let's say, for example, a star, the stars, we used to trade the stars as well, and using DeFi as our guide, right? At the time it was Sniper Pro. But yellow star, small reversal, right? Low reversal, whatever it is. Yeah. Not that it looks like that, because that looks like quite a substantial reversal to that star to that star. So you could simply scalp yellow star to yellow star using the lines and DeFi as your guide, right? So a yellow star comes in, you wait for the next candle to come in, and it looks like it's going in your right direction, boom, you sell, you get in, you pull up your stop, and wait for the next yellow star to come in. You get out of the trade. As simple as that, right? Now, obviously, when Jay does his training, he's doing it on US 30. Again, acts very differently to what gold does, but it's very, very simple. You get in at a star, you wait for the next candle, you see that it's going in your direction, look at support and resistance, look at the lines, look at what you can see, right? And you just enter. And it's as simple as that. Same thing here. Yellow star. Wait for the next candle. You wait for the candle for it to be in the direction that the star is telling you it's going to push. Again, wait for it to go in the direction that it's telling you it's going to push. Okay? Blue star. You wait. You have to wait. Now with this one, you'd have kind of been waiting a little bit, but it still went down. Okay? So wait. I wouldn't have got in on that candle. I would have waited because it's a blue star. So I would have waited a little bit longer, right? Maybe the next one, like 2 to 3 candles until it starts going in my direction. Okay? Now, again, blue star, wait. You see, it goes up, boom. You can make profit. You can easily scalp the stars. This is the way that I taught people at the very start. If you want to be a scalper, use the stars and use DeFi as your confirmation. See what DeFi is saying and use the stars as your guide. Blue star comes in, medium level reversal. Wait till the next blue star comes in and the candle shifts, right? So let's say, for example, you got in on this candle, this star, okay? You get in, you let the market come down, wait for the next candle, the star, and wait for the market to start pulling back up in the opposite direction, get out. It's as simple as that. These are just very simple ways that you can also scalp, okay? Using the tools that you have, okay? So then blue star comes in. That kind of did drop nicely there, right? That looked like it dropped straight away, but I don't know because I don't know how quickly that dropped. But simple. You wait, you get in, boom. Some moves will be smaller than others, but then some moves are going to be killer moves, right? Some moves are going to be killer moves. Yellow star, wait for it to start dropping, boom, get in. Yeah? Yellow star, wait for it to start rising up, boom, get in. Because all they're doing is creating higher high, lower low, lower high, higher lows. Okay? So they should be a good guide for you to be able to scalp the market. Easy. Now, the way that Jade explains it is, let's say the green star comes in, you know, you're going to chase, sorry, the red star comes, I always get this bit confused, right? You're in a cell, for example, okay? You are chasing the opposite star. So if you're in a cell, you are chasing the opposite star until it starts to go, right, no, I'm changing the direction. It works either way. You think about it. You're chasing the stars. So use the stars as your guides to guide you on what the market's going to do. Now, obviously, if you can hold the trade and you're happy to hold the trade and you are not going to over leverage, guys, you could simply, even though, right, high impact reversal, you could simply take the trade when you saw the red star, okay, and you see that the market starts to move, you take your trade, you set a stop, but you allow it room, then you could take this trades star, red star to green star. Simple. Literally, you could. But why would people fail at this? The only reason people would fail at red star to green star to red star to green to red. The only way people will fail is if they over leverage on their trade. Simple. You can also do blue star to blue star, yellow star to yellow star, yellow to blue, blue to red. You see, you can do any that you want. It's up to you. But if you're going to trade this way, you're either going to pull your stop or you are going to give it some room to breathe. Now, if you get the red star, you come in and you entered the trade, say here, you know, whatever, or you entered it here, could have waited for it to do its pullback, then got in, okay? Then you see the confirmation of the sell as well on here, then you know that the market's going to push down even further. So these are just really simple ways to trade. And then you could also, as I said, use DeFi as your guide, especially with the lines and the Bollingers marked out, right? Because look here, for example, red star, right on the Bollinger. What happens? Look, what happens? It pulls down to the what? Yellow star, banking level, right? Pushes up to these again, right? Yellow star pushes down to the banking level. Pushes up to the banking level. Pushes down to can you see? The banking level. Am I making sense, guys? Am I showing you a very, very simple way to trade, or am I confusing the hell out of you? Just please let me know inside the chat. Family, let me know. I need everyone to tell me, right? Spot on, says Chris. Solid, making sense. Top. Okay? And this is the good thing about TradingView, because when you're pulling your cursor up here, your mouse up here, right, you can see it's giving you the guide. Yeah, exactly, right? So, simple, right? It's simple. It's going to hit one of these things on DeFi. Whatever time frame works best for you, my lovely, right? It could be any. It could literally be any that you want, right? It doesn't really matter. If you want to use the 1 minute but trade on your account on the 3 minute, fine. If you want to use the 5 minute to trade, it whatever suits you better. Whatever makes you feel more comfortable and more confident. Because look, whatever I trade on might make you feel uneasy. So you see, the beauty of the thing is with trading is you need to have something that makes you feel comfortable, not me. because it might be too fast for you how I trade or what I like, or it might not be fast enough for you. You might like volatility, you might like the, you know, the heart palpitations and all of that. I'm only joking, but you know, so this is the thing. Most people will tell people to use such and such a thing because it's what they use. But what they use may be damaging to you in that respect, in terms of time frames and stuff like that. Because when I first started trading, guess what? I was told 1 minute, get on the 1 minute, right? The 1 minute made me feel like I needed to go and book myself in hospital. I couldn't breathe properly. My heart was racing that much. My legs were like twitching. Like I remember like the my feet, I would be squinching, bending up my toes because I couldn't handle it, you know? So use whatever time frame suits you better, my lovely. Um, yeah, I mean, this is what I'm trying to show you, Diane, right? You're gonna use DeFi as your guide, right? You're using the stars, you're using the confirmations, you're using the trend, okay? And you're using this as your guide. You should always be good, right? You should always be nice and good in your trade. So there's a couple of ways that you can trade, okay? Like I said, with this, you can trade the the confirmation here, but you remember you've got to use all of the confirmations. Do you remember what they are in Killshot? Who's calling me? I'm literally on a training session. Hang on. Sorry. Yeah, so there's a couple of ways that you can trade as well, right? And when it comes to the sell signal and the buy signal, you have to make sure that for example, this is what would have saved you in this buy signal, okay? In fact, I'll tell you. No, you tell me. You see the buy signal came in here, right? Looking where we are, all right? What would have saved you getting in this buy signal right here using DeFi? No, no, no. What would have saved? Look at DeFi. What would have saved you? There's the buy signal. Look at where we are on DeFi. What can you see? Right where the arrow is. There you go. There you go. Exactly right. So you wouldn't have got in to that buy signal because you would be watching this here, okay? Seeing that we're at the Bollingers, and what does market do at the Bollinger Bands? Pulls back. So you wouldn't have got in to that buy there. Well, at least I hope you wouldn't have got into the buy. So you can use these two scanners as, you know, literally use these scanners. Exactly what happened at the bottom. Oh, DeFi. Oh, right. Yeah. Yeah. Right. So you can use these two together. Like you see something on Killshot, make sure you look at DeFi too. Because DeFi and Killshot, although they are two totally different scanners, they work so well together. They always have done. And this is why when they all disappeared on my MT5. Hang on a sec. Something strange that happened on my MT5. Set up 2 accounts and they all disappeared. They all disappeared from my MT5 and they disappeared. Can you send me a screenshot? And yeah, so use these two scanners together because they're both what this one accommodates what this one doesn't necessarily have, and this one accommodates what this one doesn't have, and they work so well together that it's all you really need when it comes to taking a trade. Now, look, a signal came in um, on here, right? Now we know that, for example, if we're going to get into a trade, we don't not get in on the candle pullback. But look, yellow star. Guess what? You wouldn't get in until that was to change its direction. Just because it's a star idea does not mean that that was a confirmed trade, right? Because look, yellow star came in, market came down, boom. There was a fair value gap, okay, as well. So use the yellow stars to also correlate with the trades that come in on DeFi. Therefore, you wouldn't have got into that trade. Does that make sense? And plus, yeah, you wouldn't have got into that trade. Does that make sense as well? So if you use the stars as your guide, you will know when to get into trades and when not to get into trades. So what you would have done is you would have waited for the pullback, right, for the yellow star to make it smooth, because we know whenever a yellow star comes in, the market's going to pull back, right? These yellow stars, don't get them twisted. They are powerful little things. They say that big things come in small packages, right? So you wait for the pullback, see what it does, and then you would get back in, you would enter into the trade, obviously, if the trade was still there. So you use it as a guide to guide you with the trades on DeFi as well. And I'm guessing that you could probably do the same thing with the trades on Bullseye as well. Okay. But it's whatever. I mean, for me, what I've always known is that Killshot works very well with DeFi. Because then, like I said, whenever trades come through, try it with Bullseye as well. Whenever trades come through, then you know you've got this as a guide, and then you won't necessarily enter into the trades that go ahead down to stop loss, even though it wasn't a confirmed trade, in my opinion. Okay. Now, especially if you have a fair value gap. What does market always do in a fair value gap? Do you guys know what market always does in a fair value gap? Let me know in the chat. You don't? Okay, cool. So what market always does, what it does in a fair value gap, yeah, is it's always going to come through the fair value gap. Now, the question is, where does the candle close inside the fair value gap? If it closes above it, it should continue to go up, right? Exactly. Always comes back to fill it, right? If it closes below it, it's going to push on down, but it will always come back in. You see, look, it will always come back in to the fair value gap. It will always come through it. It's all about if it comes straight through it and clears it, or if it closes above it or below it. Now, if you want to look at fair value gaps, right? For example, these are the ones that you want to be paying attention to, okay? Are your 4 hour and your 1 hour fair value gaps, okay? Because look, market came up, created this fair value gap, yeah? But this isn't the one that we're going to look at. So we're going to look at this one, right? Market came up, created this fair value gap, went all the way up. Look, market came back down, closed above it, shot back up, came back down, all the way down, right? So what you want to pay attention to is where the candle closes on the 4 hour time frame in a fair value gap. If it closes above it on the 4 hour, yeah, and it will always come through it, always. If it closes above it on the 4 hour, we're going up. If it closes below it on the 4 hour, we're going down. Same thing on the hour time frame, but the 4 hour ones are the ones that hold the most weight. So always pay attention. Now, of course, on the 4 hour, you've got the risk of, you know, because it's one candle to every 4 hours, which could be like massive movement on the smaller time frames. But you look at where the candle closes, right? So look, we're here. We're just above the fair value gap, right? But look, this is more than likely going to come in. Now, if this didn't and this continued to go up, then guess what? Market would have to come back to this fair value gap at some point, right? So more than likely, what the market should do here is continue to come back down through this fair value. Okay? So it's all about where candle closes and where the candle closes in a fair value gap. So if you go to the hour time frame, see, look, we're in the heart of fair value gap right now. Let's come back to fill it, because you see these big candles, these are volume candles. They have left liquidity. You can tell a fair value gap, right? Because of these candles going up, right? You should always be able to spot where a fair value gap is in the market without seeing the fair value gap, if that makes sense. And just look at where they're created. It's always in the middle of the 2 other candles. There's always 3 candles, right? It's always the middle candle between the 3 candles, right? You see? Middle candle, right? So look at where market closes. As you can see, this created a fair value gap. Okay, it went up, it came back down, it closed above the fair value gap and shot up. Okay, so again, could have got some nice pips out of that. So keep an eye on where the fair value gaps are, and you can also trade in that way, right? Using, again, your guides on the smaller time frames as well, because you're going to see little fair value gaps. Most of the time, they shoot straight through them, especially on the 1 minute and the 3 minute as well. But again, use them as your guides, because look, what did it do? Okay, it closed above this fair value gap, and then look, lo and behold, It shoots up to the Bollingers and then starts to drop back down to what? Fill this gap. Oh, and look at that. The bottom of this is pretty much the POC on the 1 minute, right? Again, everything correlates. Everything. When you just look at what is in front of you, you will see that everything correlates. Okay? So use the fair value gaps, use these as your guide, everything on here, the banking levels as well, and the Bollinger Bands. And you should be able to guide yourself on the trades that you take as well. Okay? When you see a trade come in, when you see a trade come in on the higher time frame, look at what you see. Look for the fair value gaps. Look at the Bollinger Bands. Look at where this grey line is. And I promise you, you will start to make some good profit from the market, right? It's just a case of understanding what is right in front of you. Because there's always opportunity in the market, but it's things like this that we don't always notice because guess what? We ain't looking. Yeah, it's clicking. Is it clicking? Woohoo! That's good. That's good. I like that. I like that. Right? So, they are some strategies that you can use. Okay? Remember, look at everything that you see, guys. Please. That's all I ask, is you just pay attention to everything that you see. Okay? And you'll start to understand. And honestly speaking, you'll start to see where market will go. And you'll start to get it so precise that you know, the money is just flowing in anyway, right? So there's some strategies. Now, what we are going to be doing from now on every single Friday, because Friday's when the market goes quiet, Friday's when the market starts to die down, Friday's when the market wants to, you know, take back its money from people and, you know, all of that kind of jazz, right? Now, every Friday, this is what we're going to do. We're going to go over different ways and different things to look at on the market to give you even more confirmations with your trading, right? Are you guys happy with that, to do that every Friday? Because I most certainly am. Because the more I'm explaining it, the more, yeah, Friday training day. Yeah. The more I'm explaining it, the more you guys are understanding it, the more it starts to, like Lisa said, the more it starts to click, the more you start to make that money, right? So that's how we're going to do it from now on. Friday training days for sure. And then I promise you guys, you will start to really, really smash the markets, okay? You will start to see it as I see it. And even better than me, right? Even better than me. That I'll be asking you all to start trading for me. Am I joking? I'm just playing with you, right? But yeah. Is everybody happy? Does anyone have any questions or anything? Or are you happy with today's session? And we'll leave it at that. You happy? Oh, good. Thank God for that. As long as you guys are happy, that's all I care about. Okay, I can go into my weekend feeling like I've done something good, right? Yeah, and it's been recorded as well, so you guys can have the recording. Took good notes. Okay, perfect. Perfect. Um, as soon as the recording's uploaded, I will get that sent out to you. And then, yeah, we're ready to hit the markets again on Monday. Now, there is going to be a plan as well soon. Thank you so much. Appreciate you. Oh, bless your heart. Thank you so much. There is going to be a plan very, very soon for a 10 a.m. Trading session, okay, for the community. So that is coming up, a 10 a.m. trading session, okay, very, very soon. So I'll keep you posted on that one. And then just keep plugging in, guys. Keep plugging into the sessions. Remember, Monday, everyone have your demo accounts ready with 5,000 in it. And let's show you exactly what we can do with your trading, which is coming very, very soon. All right. So until then, family, have a beautiful, blessed evening and a beautiful, blessed weekend. And I'll see you all very, very soon. All right. Good night. God bless.